What's up, Louis? It's Guys here. Hope you're doing great. In this video, we're going to have a quick look at Meta, or better known as Facebook, and whether it's a potential investment that I am considering. With that said, I'm a big believer to invest in established companies with a good track record, great management, and great financials. If you are someone that wants to invest in individual stocks, you need to use tools that can help you identify potential investments and make the whole analysis part much easier. I love using mega charts because it's such an easy way to digest the relevant information and much simpler to understand no matter what your skill level. With that said, I'm going to search for Meta and we're going to have a look at some of Meta's latest details. One of the things that I love about mega charts is its unique key performance indicators tab, and these are performance indicators relevant to the company that you're analyzing. So if we scroll to the unique KPI of Facebook or Meta, we can see that they show the advertising revenue of Meta. So like you might know by now, Facebook or Meta generates majority of its revenue through advertising. We can see in this yearly charts that it has grown its advertising revenue to a massive $131 billion. First, I thought this is millions, but it's actually $131 billion. It's so easy to see how they grew their revenue, so that's why I like using these unique KPIs. Obviously, Facebook generates money in a few different ways, but the main one is obviously advertising. Next, I'm going to jump back to the universal key performance indicators and we're going to look at their income statement. We're going to click on the yearly chart and we can just see how Facebook again has grown their revenue over the last couple of years. If we look at the year 2023, we can see that their revenue was $134 billion. And like I just mentioned, their ad revenue alone was $131 billion, so majority of their revenue is through ads. We can see that they have a gross profit of $108 billion, as well as an operating income of $46.75 billion. So a lot of investors was spooked in the 2022 financial year, and here we can actually see how their operating income dipped quite significantly, as well as their gross profit and of course their revenue. If we scroll down and have a look at Facebook's net income, again, I'm going to zoom out and we can see that the net income for the 2023 year is around $39.1 billion, which is basically flat from 2021, but it's a massive jump from the total nightmare 2022. Something that I like to look at is the growth of companies, and if we have a look at Facebook's growth over the last year, we can see that the operating income growth alone was 61.52%, and we can even click to overlay the stock price on this chart, and we can see how the stock price has skyrocketed since the operating income and revenue growth has increased again. Next, we're going to look at the margins, and this is something that's really important to me, especially if we look at free cash flow. So again, 2022 was not the best year, although they still had a free cash flow margin of 16.54%. The 2023 year, it had a much better free cash flow of 32.66%. We can also have a look at its gross margin, which is a massive 80%, and we'll have a look at its operating margin, which is around 34%, which recovered from around 24% in 2022. Next, we can have a look at EBITDA, or also known as earnings before interest, tax, depreciation, and amortization. And we can see that the EBITDA is around 57.93 billion compared to 37.63 billion in 2022. I'm going to go back up and we're going to have a look at some of the cash and balance sheet details. And here we can see that Facebook is definitely growing their balance sheet quite significantly. Something that I like to do is a normal current ratio, where you divide your assets with your liabilities to see whether the company is using too much debt or not. So I'll click on my calculator calculator and we'll take our total assets of 229 billion and divide it with all of our liabilities, which is 76 billion, and it gives us a current ratio of 3, which is more than satisfactory. Something else we can look at is the cash and the working capital that the company has, and this is basically the cash equivalents or cash and cash equivalents that the company has. We can see that they more than doubled their cash and cash equivalents from 2022, and it's sitting at around $41.86 billion. We'll go to the ratios, and this is something that I like to look at as well. Here we can see when I click on the yearly chart, the earnings per share for Facebook is around $14.87 compared to the previous earnings per share of $8.59. So that's a pretty decent increase. Currently, if we have a look at Facebook's price, it's trading for almost $500 and a PE ratio of 33.56. So what I normally like to do is to use the PEG ratio to compare the company to see whether it's actually trading for a fair value or not. So to work out the PEG ratio, we can use a site called Yahoo Finance. We can type in Facebook, click on the analysis tab and scroll down to its growth estimates, where we can see the next 5 years projected growth, which is around 26%. The thing is, this is only estimates and this is something that we'll have to monitor going forward, but we use this growth rate combined with Facebook's PE ratio, which is 33.56. So what we'll do is we'll take 33.56 and divide it with its growth rate of 26, which gives us a PEG ratio of 1.2, which is pretty good. In my opinion, anything below 1 can potentially be undervalued, but close to 1 is also pretty decent. It's important to compare PEG ratios of companies in the same industry with each other to see whether they are fairly priced or overvalued. We are going to have a quick look at Alphabet, or basically Google, and have a look at their current PEG ratio. So Alphabet has a PE ratio of 26.57, and we can see that the next 5 years growth rate is around 19.25%. So we'll take Google's PE ratio of 26.57 and divide it with, let's make it an even 20, and we can see that it has a PEG ratio of 1.3, which is a bit higher than Facebook's at the moment. So this is important to consider because you can see whether a company is actually fairly valued or completely undervalued or completely overvalued. If we look at Facebook's year-to-date performance, we can see that it's up with around 45%, and if we look at the yearly chart, it's up with a massive 128%. In my opinion, Facebook is fairly priced, and although it's a great company that generates a lot of revenue, I'm not completely sold on it just yet, and I would like to see the price come down a bit before I consider investing in the company. And I'll also like to see what is going to happen with Reality Labs, which is the metaverse part of Facebook, because that portion of the business is spending a lot of money. With that said, if you like the platform that I use, consider signing up. Use the link down in my description. You can also get a massive 10% discount, so it can help you to start correctly and make informed investment decisions so that you can become a successful investor.